And so overall, what we're seeing is that there's, so far inflation's been pretty hot in the United States, more so than say Japan. And it's in large part because, we did more stimulus, meaning that our broad money supply, our M2, grew a lot faster than Japan's and many other countries. And so we in some ways had a larger mismatch between supply and demand than many of those other countries. But like I said, that gets kind of mitigated by the fact that some markets are global, and therefore when it comes to commodities or comes to semiconductors, many places are experiencing inflation, and many places also did stimulus, just not as large of a percentage. So we are seeing a big difference in inflation. It's partially tied to how much stimulus they did. Emerging markets are always, kind of a different matter because they can also experience inflation just because their currency is weaker, not necessarily because they did fiscal stimulus. And so they've actually taken more action to, say, tighten their monetary policy, actually raise rates, whereas developed markets have just, they've gotten less dovish in some ways, but they've not really been hawkish at all. So generally, if you look at the long-term history of growth and value has outperformed more often than growth. But there were two really big exceptions, and those were the 1930s and the 2010s. So those are periods of very, very slow growth. And so people poured into, the smaller number of companies that were actually still growing in that difficult environment. They were just secular growers. They basically new technologies or new things that just were growing despite a weak economic environment. So in the 2010s, that was like the FANG stocks, for example. And so those 2 decades were characterized by extraordinarily strong growth performance over value. And then if you look also, generally this growth to value kind of, shift tends to happen around recessions with big changes in monetary policy. And it doesn't necessarily mean that value begins outperforming growth. It could be the opposite. It really depends on what's happening in that environment. So going into the savings and loans crisis of the late 80s and early 90s, value was outperforming into that period. And then that kind of marked the turning point. Because obviously a lot of the issues that places they ran into issues were value oriented, like the financial sector. And then during the 90s, you had this huge, obviously, growth bubble going into .com, and that peaked in 2000, 2001, rolled over, and then you got this long stretch. You had a minor recession. Then you had this long stretch of value outperformance going into the subprime mortgage crisis. Then you had that big reversal, that big change in policy. A lot of the banks blew up. A lot of that was, oil companies ran into issues like commodity companies, all these kind of more value-oriented areas. And instead, those growth stocks, those FANG stocks, did very, very well. And so generally, we see that the market that we're in kind of extends until we kind of say squeeze all the juice out of that orange, right? So the valuations of that factor become very, very high, right? So going into the subprime mortgage crisis, bank valuations were very high. Going into the .com bubble and going into this period now, growth stock valuations are very high. So one is you basically get all the money you can out of them in terms of valuation, and then they basically there's tons of malinvestment at some point in that space. And when you have recession, you have changing fiscal monetary policy, that generally starts to reverse, and some of those things that were kind of left for dead that are actually pretty cheap start to become more attractive, and some of those things that have basically driven this whole latest credit cycle and that are very expensive generally start to underperform. And so my, kind of observation is that we're seeing initial signs of that for growth to value. Nothing fully confirmed yet, but basically we've kind of hit a high watermark where, growth stopped outperforming value, and it's kind of been going in this like sideways consolidation. And it'll be interesting to see if we break up and growth just keeps outperforming, or if that, in some ways did mark a kind of a change in factor performance. Obviously we're seeing the energy shortages and some of these other commodity shortages, things like that are generally pretty good for value-oriented sectors. The world has never phased out a primary energy source. Every time we find a new energy source that's more dense than the one before it, we just kind of add to the prior energy sources. And those previous ones go down as a percentage, but not in absolute terms. And so when, we used to use biomass, then we started using coal, but we never stopped using biomass. The world uses as much biomass as we did 300 years ago, partly because there's more people, right? That's actually mainly why. So each, on a percentage of our energy, it's less, but we still use a ton of biomass. Then we discovered oil and gas, and coal kind of eventually kind of leveled off, but we don't really dial down how much coal we use. Now there are some niche energy sources like whale oil, for example, that get phased out of use. But basically, when we build our civilization on top of an energy source, that is very, very slow to go away. And then when you look at wind and solar, they have some challenges. So obviously they're very good for adding to part of a grid in certain regions, right? So if you have a windy area, if you have a sunny area, they can be useful additions to a grid. The challenge is that when they get to a very high percentage, the grid becomes subject to cloudy days or windless days. And so you need one of two things. Either you need to fall back on fossil fuels anyway, or you need storage capability, which is getting better over time, but it's not like one of those things like Moore's law where it just gets better exponentially. Battery technology has actually been, for decades, it's been a very slow growing, slow improving thing because we're dealing with like material science here, real world physical constraints. And then even if you make really good energy storage, you can imagine how much metals would be required to do grid level energy storage everywhere, right? For like say half of every grid everywhere. And so there are a lot of long-term challenges for making those, anything resembling a very, very high percentage of a grid. And so I think that it's not surprising that we're seeing an uptick in interest in nuclear. So I've been talking in my research about the benefits of nuclear for over a year now. And it seems like, some of the policymakers are kind of catching on to that. So I think nuclear has a promising future, especially if they start using 21st century tech rather than, 1960s, 1970s tech. So I think that's a promising area. And I think that solar and wind will probably grow larger than they are now. But they're not really a good foundation for a grid unless we have some utterly massive material science breakthrough in terms of storage for cheap, and it doesn't use a lot of finite resources. It's partially spread out, but it's also partially not. So we are seeing inflation in many places, but it's certainly not uniform, right? So it's not like, basically if demand increases so much in the United States that basically we soak up a lot of, say semiconductor demand, you're going to get inflation for those same things in other countries as well, because it's a global market.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where do you start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.